Hi, today our group would like to present our financial accounting assignment, hire purchase. First of all, I would like to tell you the introduction of these assignments. Background of the purpose of the assignments. The assignment is an assignment that is 30% marks for the subject of financial accounting 3. So we are asked to provide a paperwork that lists our work schedule throughout the completion of this assignment. We were instructed to prepare two types of work, namely to prepare a working paper and prepare a slide presentation to present what we did for this assignment. All our work will be guided by our lecturer, Mrs. Zaima. This paper of ours will explain about the car we have chosen and how we will make the payment, which is either Islamic loan or conventional loan. Next, the group status, the planning and participation of group members. Our group consists of 5 students. We divide it into 3 tasks. First, 2 people will manage the paperwork, 1 will provide a slide presentation, and 2 people will do the presentation. Everything we do will be updated in the WhatsApp group. Every misunderstanding we will discuss between all of us. Still unresolved, we will refer to our lecturers. Next, I will tell you the definition of the basic concept of hire purchase. Hire purchase is one of the most commonly used methods to buy cars in Malaysia. The term hire purchase is often also referred to as car loans. In Malaysia, when you take out a loan from the bank to purchase a new car, you are essentially entering into a hire purchase agreement with the bank. In hire purchase agreement, you are the user of the car and are responsible for insuring and maintaining it. But the bank or lender remains the legal owner. To put it simply, you are hiring, think of it as renting. The car that is owned by the bank. As the hirer, you will have to pay monthly installments to the bank based on what was agreed in your hire purchase agreement. An Islamic loan is based on Sharia laws. The Islamic religious law is stated in the Quran, Hadith and Sunnah. Unlike conventional loans, where money is seen as commodity, there is no money loan to the borrower as the bank will purchase the item for the borrower and sell it to the them at a higher price. The Islamic bank's financing is structured as a purchase and resale of real assets, such as car, house, commodity, or stock, instead of a loan. It is strictly regulated as it is managed by both Islamic law and finance industry rules. Islamic banks must conform to a variety of principles wherein there is no interest to be charged and products offered are halal and Sharia compliant. Next, the definition of conventional loan. In conventional loans, the bank lends borrower money with an interest. Banks then earn a profit from the interest charged on the amount borrowed. For instance, when you take out a loan, you will repay the loan amount, along with the interest rate and the prescribed rate over a set tenure by installment. The specified rate is based on a margin above the bank's base lending rate, BLR. If a borrower makes a late payment or defaults, the bank has the power to charge additional interest to the amount borrowed. The interest accumulated is a way of paying extra fees when you pay late. The interest payable may also be capitalized. This means an interest charge is added to the total amount of interest owed since the last payment of the balance.
Um, I will talk about I will discuss about the characteristic on Islamic and conventional law. For Islamic law, it emphasizes the need for financial agreements to be supported by real trade or business-related activities. This provides an efficient boost for economic activities and the economy itself. Islamic law helps lessen the effects of speculation on the economy because it forbids transactions involving error or extreme uncertainty. Next is Islamic loan can floating profit rates and profit rates are capped at a maximum. And Islamic loan also lower charge are incurred on the late settlements. For conventional loan, it does not need to conform to a halal requirement. Next is any alteration to the terms of the finance would just need to be upstamped by the by the loan facility agreement. Next is if you default, restructuring or refinancing is an easier task for conventional loan. And last for conventional loan is the cost for early settlements, late payments or defaults are more transparent in the contract. Next, we talk about advantage and disadvantage based on Islamic and conventional loan. For Islamic loan, um, the advantage for Islamic loan is it assists in financial inclusion. Next is Islamic law can reducing the impact of harmful products and practices. It also promotes the principle of financial justice. And then it also can encourage it's also encouraging stability in investment. And for advantage Islamic loan is accelerating economic development for Islamic loan. Next is disadvantage for Islamic loan. Firstly is the documentation. Documentation is often tailor-made for the transaction, so high transaction or issue costs. Next is Islamic banks cannot minimize their risk as hedging is prohibited. Next is Islamic loan can be difficult to balance the interests of the financial institute with those of stakeholder. Islamic loans also with no interest. It is hard to claim some Islamic instrument as debt. Therefore, losing the tax the benefit and increasing the WACC. And the lastly for disadvantage for Islamic loan is some Islamic product may not be compatible with international financial regulation. So for conventional loan, the advantage is can be used on properties of all the types. Conventional loan can cancel existing mortgage insurance. And it's also more loan programs option and no max limit on the loan. And also last for the advantage for conventional loan is more lenders and location to choose from. For disadvantage conventional loan is it is higher down payment, higher rates, sometimes it is also sometimes more difficult to qualify for. And lastly is it is possible prepayment penalty.
So for analysis, we choose to compare product Alza and product Asia. In this picture, you can see the price and the down payment. For the comparison in physical, you can see that down payment for product Asia is much cheaper and product Alza is bigger than product Asia. And product Asia was high technology than product Alza. So in this situation, we agree to choose the product Asia for our assignments because the price was affordable and it suits for our status, which is still single, and it also have the seatbelt reminder and reverse caution for our safetyness. By the way, the disadvantage of this car was can only accommodate for 4 passengers only. For the systematic analysis and evaluation, we do some calculation between conventional bank and Islamic bank. So on this calculation, we can see the deposit was the same, and to get the amount of 35,571 and 30 cents, we have to multiple by 90% because of the bank will give 90% of loan, but the rate of each bank was different. So as you can see, the second calculation, the conventional bank give rates 3.31%, but the Islamic bank give rates for 3.05%. So we calculate for 9 years. So this is the answers. The installment per month and the total interest that we have to pay. So the hire purchase was the total that we have to pay, including the deposit, the interest, and the loan. So as you can see, the Islamic loan was cheaper than conventional loan. So we agreed to choose Islamic loan because it was cheaper than conventional loan, and it was also under socio-religious guidelines that doesn't have any charge or interest. It also avoid all impossible transactions such as gambling or short selling. Islamic bank also have strong Sharia governing framework. So I think that's all for our group. Thank you for listening.
Thanks for watching, guys.